Thinkers, gamers, and traders, welcome to JBeanTV, the prediction arena, where foresight meets fire. Let's dive in.
Hey everyone, welcome back to the JBeanTV Prediction Game Show. We're in challenge number 14 and it's heating up fast. Tonight we're diving into day 2 of candle training with Doug as he breaks down the concept of barriers, those critical price zones that can make or break your predictions. If you were here on day 1, you already know how powerful these insights are for sharpening your forecasting edge. After Doug's session, we'll jump over to the leaderboard to see how everyone's stacking up after last night's predictions. The competition is tight, the energy is high, and challenge number 14 is officially well underway. Let's get things started. Please help me welcome the wizard himself, Mr. Doug Kyle. Hey, Doug, how are you?
Great bit, Kaz. How are you doing?
I'm doing fantastic, thank you. I'm excited to get into day 2 and learn more about these candles and how, what it all means. We were talking about last night that it's been a long time since we've done the beginner training, and
Right.
I know for most of us, we got a lot out of just watching this again, going through it again with you. So thank you for that.
We say that it's the basics, right? But, I think it's really easy to lose sight of how powerful some of the basics are. And we're going to see that tonight too when we start talking about barriers, because I think a lot of times when we're projecting or when we're, trading, we lose sight of just where price action is in relationship to a barrier. And so we got to remember those things because, the barriers are what attract price action.
Yeah.
And simply because everybody on the planet who's trading is probably looking at the same barrier that you are because they use similar indicators, it makes those barriers very, very important. And it's important for you to know where they are, Bitcast.
Nice. Yeah. Very, I was just sitting here thinking about how many people like I know who, when they do see a candle and they don't understand the candles, what's really the story behind them, they see a candle start to grow, right? And it starts to go green and it starts to run. I can't tell you how many people I know that actually run and jump in and say, "Oh, I got to get some of this. It's going up."
Right.
And I'm thinking, man, if you understood how candles work, I don't know that you'd be running and buying anything right now.
Well, and the ones that's really bad, the ones that are trading leverage that jump in,
Yeah.
right? And then, they like trading the momentum. I understand that, the market is moving up and they're wanting to trade that momentum. And that's really, really important to be on the side of the trend for sure. But the other side of that is if you are going to jump in, if you are going to do those things, how close are you to the top? How close are you to a barrier? Are you jumping in right at the point where it might bounce off just to go deep enough to stop you out like they do because they're trading leverage, only for the market to turn around and continue to go up? I can't tell you how many hundreds and hundreds and hundreds of traders that I taught how to trade Forex that was the common story.
Yeah.
I just got stopped out and I knew it was going to go up and it did go up, but I said, I'd always say, well, did you make any money? No, because I got stopped out. Right. And so knowing where it might bounce and knowing where to get in, even in a running market, is very, very important, Bitcast.
Yes. Yes, absolutely.
All right, well, let's dive in here tonight, guys. I'm going to share my screen and we're going to look at some barriers and what a barrier is. So I'm going to, little refresher from last night. We talked about for the beginners, and I'm going to show this just before I dive in, so I can entice the advanced traders also. We're going over beginner stuff this week, but for you advanced guys, we've developed all these indicators that are based on open interest pressure index, the information being pulled from the futures markets and stuff. we have some really, really advanced indicators. But this week is dedicated to our new people. So I just want to make sure that our advanced people that are looking at this thinking, oh, okay, well, they're just talking about basic stuff this week. Okay, and we'll be building into those advanced indicators so that we can bring everybody along with us. But this week it's about the foundation. It's about, how candles work and getting some understanding of what candles do. So yesterday I talked about candles. I talked about the body and the movement and where the opens and where it closes, and I talked about the wicks. I talked about all those things yesterday. One of the things that I began to talk about was the volume inside the candle. So we began to talk a little bit about some advanced type stuff, is where volume is actually taking place within a candle so that we can see the difference between candles that look like this and candles that look like this. And these are more informative, right? There's more information here versus this here. The candle's telling a story here for sure, but here candles are telling a story and you're looking inside the candle for an additional story. So we got that yesterday. Everybody understands that little kind of rehash. If you didn't see yesterday's show, be sure to go back to it, especially if you're new, so you fully understand what candles are and things like that. Okay, so today we're going to talk about barriers. And when we talk about barriers, we're usually talking about what the market calls swing points or pivot points. These are points in the market where they hit a high and it came down, or they hit a low and it came up, hit a low, came up, hit a high, came down. These are important points because the market is looking at when it comes back to a level, is that level going to hold again? And we use an indicator. It's a pivot points. And this is this hard for you guys to see, Kaz? These little red lines, I bet they're hard to see. So I'm going to double click on these here. And again, this is a function inside TradingView. I'm going to increase the line size so you guys can see them here, and maybe even lighten up the color a little bit.
That is much better. Thank you.
Yeah, and let's go to a lighter color there and bigger line size. Okay, and we'll do the same with the downs. We'll go to a lighter color and bigger, maybe even a little bit lighter if I can find. Maybe that's better. Okay, and let's do this one here. So this is how you change things in TradingView for new people. This is the chart that we trade on, or we look at the candles on. And all I did is I selected the indicator that I'm using, which is defining the swing points. And I went into the back and I adjusted the colors. That's all. Pretty simple, pretty basic stuff, okay? Simple if you know TradingView, and it's basic if you've been trading for a while. And I've always got to remember that, okay? All right, what we're seeing is the green lines are finding what we call the swing lows, where the market came down, hit an area, and came back up. The pink lines are finding what we call the swing highs, where the market went up, created a barrier, and then came back down, okay? Those are very, very important areas, because when the market gets to that area again, like it did here, okay, and I'll use a little box for you guys so that you can really see what I'm talking about. And I'm going to zoom in here. I want you to look at this swing high, okay? That's this line right here. It's at the top of the wick. The bodies are down here. This is where price action really said, we're not going to go any higher, okay? It rejected here and it came down on, whoops, and let me zoom in a little bit more for you guys so you can really see it, right? We have these are wicks, right? And the bodies are here. That's where the market said, okay, this is where price really is holding. This is both rejections. But if we look at this, if I put a box here, and I haven't done this, but we'll see where it goes to. We can see that over here, the market almost got to the same level as the bodies here, where price action really held. Okay, this is rejection. This is where we really held. And you see, we came back and we tested that exact area. So, and we can see that there's a number of times that we tested it here also. So this becomes a zone, and we'll look at zones and barriers in a little bit, but I just want you to see how price repeats itself when it gets over here, okay? So that now there's another, there's another level to these swing points that I need to point out, okay? And I'll show you how important these things are. And they don't play out always exactly the same, but remember, I kept talking yesterday about the rest of the story. You know, I felt like Paul Harvey, right? Some of you guys are young, don't even know who that is. But anyways, we're always looking for not just one level of understanding. We're always trying to find multiple levels of understanding, okay? Around anything that we're trying to discern that might happen, okay? Let me give you a couple of really, really good examples. Let's just bring this swing point on over, okay? I'll just do that. The market came up to it, rejected down, came up and closed above it. And where did we come back to? Exactly to, almost a little bit below, but almost exactly to, right? So what we know and what we believe in trading, right? As market is coming up to something like this here, this is resistance. This is called resistance. The market's coming up to it. When it's coming down to it, it's called support. Support and resistance. And this is a basic concept in trading, and it's so basic, everybody uses it, okay? So, and I changed, now these are red lines, and watch what happens, okay? I'm going to do this for you guys. I'm going to do a little trend line here. Hang on a second. And I'm going to color this red or pink, this color that we're using here, and try to make it dark and thick. Okay, there we go. This line is resistance, okay? It's resistance right up to this candle that broke it, so that the market comes up. It acts like resistance, and the whole market is looking at this. So if I'm predicting a high, okay, and I'm predicting that I got a lot of volume here, I broke this resistance here, I closed above it, okay, and I got a lot of volume, depending on what my volume is saying and the rest of the indicators that I showed you last night. If I'm predicting a good sized move, there's a couple of things that I have to take into consideration. This is my high. So where's my high prediction going to be? It's going to be potentially right there, or maybe here in the bodies, which wouldn't be too far off, but it's going to be developed. My prediction, and if I'm trading, is going to be developed around here. The other thing that we talk about, if we're trading and not just predicting, and I'm getting in here, right? How far is it to this area? Well, it's less than 1%, okay? This is 1.5% or 1.17% from my potential entry, okay? So there's not a lot of room for me to get into a trade and make profit in the short range. If I hold on and let it run, yes, but I got to believe that it's going to break this barrier. First attempt, it didn't. Okay, second attempt, it didn't. The other thing that I know is once I break this barrier, okay, this now, let me get rid of this thing here and let's make a copy of this. What was resistance? This is resistance, kind of like the ceiling in your house or in the room you're sitting in. If you look up at your ceiling and you're going up, you're going to run into that ceiling. That's resistance. If you're sitting in a chair and you stand up, your floor is below you, that's support, okay? So when does resistance become support? Okay, well, when the line gets broken, okay? So now this line right here got broken, and guess what? It became support. Look at what happened. I'm now above the market. I'm predicting an up, but where might my low be? Okay, well, I would be predicting back towards this range or at least at the bottom of these volume bars, right? Which is at the top of the candle. If I'm going to see real continuation up, where do I want to see all this volume? I want to see it down here in the bottom, right? If I see it up here, what that is telling me is I got a conflict between buyers and sellers. There's a battle going on. So that my very next candle probably not going to run to the upside. It can, but not a high probability, right? So I got to look at the probability set and say, okay, well, my high volume's here. If I predicted this right, then I probably would have predicted this kind of tight range, okay? I didn't go anywhere, so my next candle, what is my prediction possibility? Well, here's support, okay? Maybe I pick this as my low, okay? And then I pick maybe a high, and we can look at maybe why the market came here and stopped. I don't know, but let's look. I don't know if there's anything back to the left that tells me that this range is something important, but we'll go back and look. Okay, yeah. This was the area that was support. It got broken, and we came almost back to that same area. And the market is trying to understand over here, how does the price action over here relate to here? Because everybody's trying to find something in price action that says I can hook into this and put my money at this level because I see a battle over here that's happened before that was support and resistance and became resistance and support again, okay? And so that would be maybe, and I got a lot of high volume in this down candle right here in this same range. Maybe I find that, maybe I see that if I'm not trading with our indicators, probably I don't because this is all I see, okay? But when I go to the more advanced indicators, I get a little different picture inside, okay? So now this became from resistance to support and exactly came back and held. We can see back over here. It came down, it bounced in that same range. Okay, now look what it did. This is like reading a book. I tell people that all the time. This is a new swing point. Okay, that's a swing low, so it's support. Market goes up to the swing high, that's resistance. Comes back down to support, bounces a couple of candles here. We close below support with some volume, okay? What do? If you see this candle right here, we bounce exactly back to it. So if I'm predicting this candle, I just close below it, probability is I'm going to push back to what was support, and now what is it now? It's not support anymore. Okay, it is now, because we broke it, it turned into resistance. Okay, so if I'm here, I'm going to predict potential down move. I got pressure. This one is here, but this is the one that's my high. Okay, now am I going to predict this really tight range? I got a lot of pressure here coming in. Okay, maybe I do. Maybe I think it's a tight range, or maybe I'm a little bit more foresight. I look at more of the indicators to get a little deeper feeling. Maybe I predict the deeper trade. So support and resistance is really, really important for predicting and trading. And it's one of the most fundamental things that I think everybody needs to know. Once you get past understanding a candle, okay? Because once you get past understanding a candle, now you got to understand how the market moves within ranges, within support and resistance, and those kind of things. The other thing that I want to look at here with everybody tonight is we looked at, and I don't think we did this last night. We looked at standard candles, and we looked at different time frames, and we said that a candle only represents market price and movement within whatever time frame we select. Like here's a monthly candle, right? And we're looking at a 2-hour candle here. And I picked a 2-hour candle so I could show you more of the barriers, and it was a better, easier to see lesson, okay? We use 2 hours, we use 1 hour, and we use daily a lot. You can see the barriers on those two, and you can see that the market reacts to those barriers very, very similar, okay, when the market gets to those points. The thing on daily is that you'll have bigger wicks, bigger movements. So when you're trying to dial in a barrier, sometimes it's better to use a tighter time frame because those longer time frames will have bigger wicks, bigger movement, those kind of things. So anyway, so we looked at what was a standard candle with time. The other candle that we use a lot, and I use a lot, is what's called a Heikin-Ashi candle. It's a candle that is based on a high-low close of prior candles. It would be what we would call an average, and I'm going to take off the volume here for a second so you can see it. What it does is I want you to look at this up move. It smooths out this move to help you understand where pressure is. So if I'm predicting and my Heikin-Ashis are closing green, my next prediction is probably going to be up. If I get to the point where the Heikin-Ashis are really failing to close above the prior wick, like this one closed above this wick. Now this is a huge wick. We're inside. We already know from this one that this up move is trying to find an end. That tells us right there that this up move is trying to find an end, but we haven't seen any red Heikin-Ashi yet. Here's our first one. Okay, very small, didn't go anywhere. Retest, then we get a decent, but this is the first sign of something rolling over. Now you'll get faked out every now and then where you think this is the sign of it going to roll up, but this one didn't immediately go down. It's the next candles that tell the story. Green, red, oh, this one closed down, we're going a little bit lower. Now I get green, 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 little up. So you can read these and kind of get a feel for what BitCaz was talking about earlier, somebody just jumping in and buying, right? Well, I wouldn't want to jump in and buy up here because I see everything stalling out and I get my first red Heikin-Ashi, right? If I do anything, I'm going to wait for a pullback and find a green Heikin-Ashi and maybe get in for a little move. I don't know. It's very tight when you're up against the barriers and you can see the rejections. I wouldn't have big expectations of any move unless my candles closed above this resistance, right? We've established support. We come back, we bounce off it, we bounce off it. We close below it, we pull back to it, and we come down. Okay? Over and over and over again. You would think that trading would be the easiest thing on the planet. It's not, because there's emotions that get tied into these moves and tied into trying to understand, what's really happening in the moment, right? But if you get the basics down and you start with your analysis with the basics, even though we have extremely advanced indicators that are really advanced stuff, we often forget that these tell us a story also, but we have to not ignore the foundations, because the majority of the traders are trading based on basic foundations. And so we can use this to enhance our foundations, but if we overlook the foundations, then it's easy. It's easy to get turned around in predicting, and easy to get turned around in trading, and it's easy to lose money trading. Where if you understand the market, you understand how to trade correctly, and I teach that also because we have tools that really help trade, where we don't believe in losing money when trading, but we do a very advanced cost averaging system. We don't go in with a lot of money too fast. We don't ever trade leverage. We end up owning the currency, and it allows us to trade things correctly. And if we do it right, we find ourselves really making money consistently in the market. And we'll be going over that more and more too. But right now, our show, JBeanTV, we're focused on predicting, because if I can get everybody to predict better, I'll make everybody better traders. And that's what this is all about. So, BitCaz, if you're there, I think that is it for tonight.
I am here, and what a powerful session. I just have to say, this is getting good, Doug.
Thanks, Big Cass. Yeah, I'm a geek. I love this stuff. Yeah, so we got to bring on DDOG here, and let him share his screen and show us who knows what they need to know to predict here, Big Cass.
Yes, let's see it. Drum roll, please.
Oh, wow.
Our excellence.
Way to go, buddy.
Wow, look, he beat Mean and Mode. Look at
Wow,
that.
look at me in a mode.
Mean
Are
and
you
Mode are
kidding
all up
me?
there.
I'm number one.
You're number
Yeah.
one.
Yeah.
Look at that
Thanks
high.
to
Look at the
Grok.
percentage on the high.
Thank you to Grok Expert.
You're using Grok a little, huh?
Do you see
Oh,
that,
yes.
Doug?
Yeah. What's that?
Look at the percentage on his high.
I know. I know. He nailed
Holy
it.
moly.
Zero. That's the second time we've seen a 0, 0, 0, 0, 0.
Yes,
How
it
do you get
is.
better than that?
That is
And the
fantastic.
high is the low is important too, but the high is really important because it tells you where to get out. So
Yeah, right?
very, very good job. So yeah, I'm looking at some really good. I look at the second zero. Oh, mode is that 0, 0, 0.
Yeah, Mode. Look at that.
Wow. And we got a 0, 7, a 0, 2. Look at we got a lot of people that were nailing the high.
Nice work.
Okay. Guys, a little weak on the lows. Okay, we got to work on that and the close, but all of that is coming. So great job, everybody.
Yeah, great job. Par excellence. Nicely done tonight. Appreciate that. That's
Yeah.
fantastic.
Out of all of the predictions, guys, the two that are the most important, I used to say it was the close, and it's really not. The two that are most important are the high and the low. Because if you can get where you can predict the high and low fairly consistent, right, then you're going to be at a point where you know where to get into the market and you know where to potentially get out of the market consistently. And that is how you make money. So,
Yeah,
Exciting,
because
Big Kaz.
well, nobody's trading the close, right? I mean,
That's right.
it doesn't that I never thought about that until just now. It really the close really doesn't matter. It's just is just something
Just
if you're
something there.
if you're close to it, I mean it's bragging rights, right?
It is bragging rights.
That's
And it helps sharpen your skills. Someday we may get rid of the close and just focus on the high and low because really when we're trading, that is what's important.
right,
But I
exactly.
use the close kind of, I get a lot of people that are close on high and low. Close is hard. It's hard to get right. So to me, sometimes it is the tiebreaker. So,
Yeah.
anyways. All right, Big Kaz, officially back to you.
Wow, well, what a powerful session tonight, Doug. He walked us through the art of reading the market, mapping out support and resistance barriers, showing how price reacts to those critical levels, and helping everyone see the rhythm behind the candles. He brought back the intra-bar indicator to dig into the volume inside each candle, and then introduced Heikin-Ashi candles, showing how they smooth out the noise and reveal true market momentum. That insight really connected the dots between volume, structure, and trend strength. Before we wrap up, let's give a huge congratulations to our nightly leaderboard winners. You are setting the pace for challenge number 14 and proving that focus and consistency really does pay off par excellence. As we head into day 3, keep studying those barriers, practice spotting Heikin-Ashi transitions, and stay sharp. Every candle tells a story. Thanks for showing up, learning, and leveling up with us. Until tomorrow, trade smart, predict boldly, and we'll see you on the leaderboard.
That's a wrap from JBeanTV and the Prediction Arena. Keep predicting, keep climbing, and I'll see you next time.
You can't join without your OmniBean NFT. It's your pass to predict, compete, and earn rewards. Grab yours now at prediction-nfts.jbeantv.com and join the next live show.